అగ్రికల్చరల్ ఫైనాన్స్ ఇన్ ఇండియా. మనం ఇప్పటిదాకా వ్యవసాయ రంగం యొక్క తీరుతెన్నులు, భారత ఆర్థిక వ్యవస్థలో వ్యవసాయ రంగం యొక్క అభివృద్ధి, ప్రాధాన్యత, ఈ అంశాలు చూడటం జరిగింది. అయితే ఎంతో ప్రాధాన్యత కలిగినటువంటి ఈ వ్యవసాయ రంగం ఎదుర్కొంటున్నటువంటి ప్రధానమైనటువంటి సమస్య పరపతి సౌకర్యాలు అందుబాటులో లేకపోవడం. సో ఆ రకంగా భారత వ్యవసాయ రంగం అనేది పరపతి సౌకర్యాలు తక్కువగా ఉండడం వల్ల శాస్త్రీయమైనటువంటి పద్ధతిలో అధునాతన వ్యవసాయాన్ని చేయలేకపోవడంతో మనం ప్రపంచంతో పోల్చుకుంటే చాలా తక్కువ స్థాయిలో ఉత్పత్తి చేయడం జరుగుతూ ఉంటుంది. కాబట్టి భారతదేశంలో వ్యవసాయ రంగం యొక్క పరపతి సౌకర్యాలు, తీరుతెన్నులు ఎట్లా ఉన్నాయో ఒకసారి మనం పరిశీలించినట్లయితే ఈ చాప్టర్ ద్వారా మనకి అవగతం కావడం జరుగుతూ ఉంటుంది. The financial requirement of the Indian farmers can be classified into three types depending upon the period and purpose for which they need funds. So why the farmers required the finance assistance? To cultivate the land, they have to purchase some inputs. That's why they need the finance. These financial requirement of the Indian farmers we can classify it into three types depending upon the period, purpose for which they need the funds. Farmers may need funds for a short period of less than 15 months for the purpose of cultivation. This may include purchase of seeds, fertilizer, fodder, etc. So when the farmer going to cultivate the land, he needs some inputs. So you must be purchased in the market. The inputs are like this: seeds, fertilizer, fodder, etc. So these purpose the farmer required the finance. So this is for only short period. He required only short period purpose. The main require finance for medium term period ranging from 15 months to 5 years. This is medium term finance the farmers needed for a medium range. The main purpose of this medium range finance requirement for making improvement on land, buying cattle. So cattle nowadays the farmers they are using cattle in the cultivation for plowing purpose. So they need cattle. So they must buy the cattle. And agricultural implements. So these purpose the farmers are requiring the medium term loans. It consists 15 months to 5 years. Then the farmer can also require the long-term loans. They may also require finance for long-term period for more than 5 years for purchase of additional land, to pay off old debits, to purchase costly machinery, etc. So these purpose the Indian farmers should have the long-term loans. Purchase of costly machinery. When you go to implement the new scientific techniques in agriculture, you must have the machinery. So purchase of costly machinery need a finance requirement to the farmers. And farmers pay old debits. And the purchase of additional land. These purpose required the long-term loans, which consistency above 5 years. The financial requirement of the farmers can further be classified into productive and non-productive loans. This is basis on the productive and non-productive. Already we discussed the basis on the period of loans, a short term, medium term and long term. These classification based on the productive and unproductive loans. The productive loans include for purchase of seeds, fertilizer, buying cattle and agricultural implement, digging wells, purchase of additional land, etc. This is called productive loans. The farmer take loans for to development, to improve the agriculture. He must need to purchase of seeds, to purchase of fertilizer, buying cattle and agricultural implements, and some of farmers wants to water facilities by digging wells. Some farmers expand their agricultural activities, so he wants to purchase a additional land. For these purpose, the farmers should have the loans. This is called the productive loans. If the farmer invests on this purpose, he can produce the agricultural crops and he can sell it and he can gain some income and repay. This is the main feature of the productive loans. Whereas unproductive loans include for performing marriages, social ceremonies, religious functions, etc. So many farmers taking loans or finance assistance for unproductive activities like performing marriages. So this is the big challenge to the farmers, to their daughters. He wants to marry their daughters or other relatives. So in that functions, they expend more money to perform the marriages. That's why they wants to loans. And social ceremonies, religious functions. When we expand in this area, we cannot regain. That's why we are called this is unproductive loans or unproductive expenditures. So productive expenditure, if you invest, we can gain some income. But the unproductive expenditures cannot gain any income. So the farmers fell into a debt. The farmer depended completely on money lenders, commission agents, and relatives to raise unproductive loans. So farmers perform these marriages or social ceremonies, religious functions. Nowadays it is very common in villages. It is the farmers are feeling a response to perform these type of functions or ceremonies. So they need some financial assistance. Financial needs, they depend on only money lenders, commission agents, and relative to raise these unproductive loans. They completely depends on money lenders, commission agents. Some of farmers taking these type of loans of their relatives or friends, etc. These community like money lenders, commission agents are very easily accessible to the farmers. That's why they are taking more loans from unproductive loans from these money lenders or commission agents, etc. The source of agriculture credit available to Indian farmers can be classified into two types: non-institutional and institutional credit. So we already discussed which purpose the farmers wants loans, what type of loans the farmers requirement, which purpose they expend the loans. Then we are going to discuss about source of availability of loans or credit to the farmers. What type of loans are availability to the farmers? These classification based on the availability of loans to the Indian farmers. There are two types: non-institutional loans and institutional loans. First of all, we are going to discuss non-institutional sources. Non-institutional sources include money lenders, landlords, traders, commission agents, relatives, friends, etc. These are called non-institutional source of credit or source of finance, which is available to the Indian farmers, which is most of the farmers depending on these type of credit sources. When they need money, they are going to money lenders and landlords or commission agents or relatives, friends, etc. These, the money lenders or commission agents, relatives, are very easily accessible to the farmers. They cannot put any conditions. They can give easily money to the farmers. That's why so many farmers depends on this type of non-institutional source of credits. In 1951-52, non-institutional source contributed 93% of financial requirement of farmers. It's a huge amount, huge percentage of financial support from the non-institutional sources. At the time, government could contribute only 7%. This is called structural organized loans. Unorganized loans are non-institutional sources 93% of total financial or credit sources. But government provided only 7% to the farmers. This is very bad situation what the Indian agriculture is facing. But these sources have many defects. The non-institutional financial sources had many defects. The interest rates are not uniform. The farmers paying high rate of interest to these non-institutional credits, and these loans are exorbitant. Often small farmers are cheated and their lands are appropriated. Some of small farmers, they have not repaying capacity and they are illiterate. They cheated by the landlords. So they loses their lands to the above landlords or commission agents, etc. The landlords are exploited. Money lenders are exploited the farmers for fixing high rate of interest, putting so many conditions. The landless laborers are forced to become bonded slaves. So some of landless laborers are forced to become a bonded laborers for years and years. This is very unfortunate situation in Indian agriculture is facing now. So the source of non-institutional, the source of credit classified into institutional and non-institutional. The non-institutional sources are easily available to the farmers. They are taking much loans. Nearly 93% of their requirements depend on non-institutional source of credit. That's why they are becoming debit. Now, other source of loans, the farmers depends on institutional source. Since the private or non-institutional source of credit is defective and exploitative, the government followed a multi-agency approach consisting of cooperatives, commercial banks, and regional rural banks, which are known as institutional credit, to provide cheaper and adequate credit to farmers. So, we discussed the problem in non-institutional source of credit. The government initiated to increase institutional credit source to the farmers. The government followed a multi-agency approaches to provide institutional loans to the farmers. They consisting cooperatives and commercial banks and regional rural banks. Most of the institutional credit available to the farmers with these three type of agencies. These are all cooperatives and commercial banks and regional rural banks. These institutions provided loans to the farmers with a cheaper rate of interest and adequate credit to the farmers. This is much better than the non-institutional source of credit, because low rate of interest and time to repay the loans, these facilities is benefiting to the farmers. The basic objectives of institutional credit source are three types. These main objectives to facilitate the institutional source of credit to the farmers. Number one, to ensure timely and adequate flow of credit to farmers. Farmers wants to loans when the agriculture season is started. At that time, they need financial assistance. So, if they did not have a loans in institutional structure, he may go non-institutional structure of credit. So, avoid this situation, the government set up a multi-agency approaches to provide institutional credit to the farmers. The main objective of this type of credit system to ensure timely and adequate flow of credit to the farmers. And second one, to reduce and gradually eliminate the money lenders. So money lenders, commission agents are giving much loans to the farmers. Nearly 93% they are providing to the farmers. The farmers are facing so many problems with these credit facilities. So, the government reduces gradually eliminate the money lenders. Then, to make available credit facilities to all regions of the country. So, government provide these credit facilities to all the regions in the country. These main three objectives are to set up the institutional credit source. So, institutional credit source were classified into three types: cooperatives, commercial banks, and rural banking system. With these three structures, the government provided the credit facilities to the farmers. So, first institutional credit sources is cooperatives. The cooperative movement was initiated way back in 1904 through the establishment of cooperative credit societies to relieve rural indebtedness of people. This is the main objective to establish the cooperatives. So, relieve rural indebtedness of the people. The cooperative credit system in India have been organized into short-term and long-term structure. The short-term credit structure is based on three tiers. At the lowest tier are the primary agriculture credit societies, what we call PSCs, primary agriculture cooperatives. These PSCs are organized at the village level only. The village farmers formed a primary agriculture cooperative society, and the farmer can take a membership in the society, and this society provide a loans to the member of this society. So, this society at the functioning at the village level only. At the second tier, the district cooperative credit banks. Now, we are calling them DCCBs, district cooperative credit banks. These institutions organized at the district level. And third one, at apex tier, the state cooperative banks. This is called SCBs. They are organized at the state level. So, cooperative structure, three types: tier 1, tier 2, and tier 3. Tier 1 level performing at the village level, tier 2 performing at the district level, and tier 3, this is called apex tier, the state cooperative banks. These are organized at the state level. This is the cooperative structure in India. These three type of tiering system is providing the financial assistance to the farmers, credit facilities to the farmers at their respective jurisdictions. The state cooperative banks coordinates the extension of short and medium term loans to perform through the DCCB and PSCS. The SCCB is the main agency. It's a apex agency in the cooperative system is called SCCB. It coordinates the extension of short and medium term loans to farmers through district cooperative banks and primary agriculture cooperative societies. The long-term credit requirements of farmers are provided through PACRDBs and SCARDBs. This is called banks. Primary cooperative agriculture rural development banks and state cooperative agriculture rural development banks. These two institutions are providing long-term loan facilities to the farmers, and short-term and medium-term loans issued by the DCCB and PSCS and SCCB. Long-term loans, the PCARDBs and SCARDBs are providing short-term and long-term loans to the farmers through this cooperative structure. The amount of credit advance by these societies increased from 23 crores in 1951-52 to rupees 1,425 crores in 1979-80. So the institutional credit through cooperative society is increasing day by day. It is only 23 crores in 1951-52. It is increasing 1,425 crores in 1979-80. By 1992-93, these institutions provided rupees 6,484 crores of credit. Totally 54% of the credit providing through these cooperative societies to the farmers. In 2012-13, cooperatives provided an amount of rupees 1,11,203 crores credit to agriculture. Very recent statistics. This is the 18.3% of total credit for the farmers. That's why these cooperative societies or cooperative banks performing very better to the farmers and development of agriculture and rural development. And second institutional facilitate organization commercial banks. The share of commercial banks in the provision of agriculture credit was very meager in 1950s. It was just only 9% in 1951-52 and only 0.7 in 1961-62. So the commercial banks are gives loans to farmers very meager. The advances to agriculture by commercial banks aggregated to only rupees 160 crores in 1969. But after nationalization of banks in 1969 and 80s, not only the number of branches of commercial banks increased at rural level, but also the amount of advance to agriculture increased massively. This significant change to provide the loans to farmers or rural development after 1969, after nationalization of banks. The commercial banks extensions their branches in rural levels. They are providing banking services in rural people, in villages. They are opening their branches in villages also. So this is the main significant changes of commercial banks after 1969. After nationalizations of bank. As on 31st March 2013, advances by public sector and private sector banks to agriculture stood respectively rupees 5,30,600 crores and 1,11,900 crores. This is the huge amount of loans to provided to agriculture sector through commercial banks, private sector or government sector, public sector. The third one institutional source of credit is called regional rural banks. As the commercial banks fail to fill the geographical gap in the availability of credit not covered by the cooperatives, the working groups on rural banks headed by Sri M. Narasimhan recommended for the establishment of RRBs. To bridge the gap in the provision of loans to small and marginal farmers, landless laborers, artisans, and other rural residents as small means. The working group headed by M. Narasimhan recommended to establish the rural development banks in the rural area. They can bridge the gap in provision of loans. So there is a gap. Cooperatives are not giving enough loans to the farmers, and commercial banks also not provided sufficient loans to the farmers. To fill these gaps, the rural regional rural banks was established in India to provide a geographical gap, fulfill the geographical gap. Upon the recommendations of working groups, 5 RRBs were set up initially on 2nd October 1975. So first, initially only 5 RRBs set up in 1975 October 2nd. This number later increases to 196 throughout the India. In 2012-13, the RRBs accounted for 10.5 of institutional credit provided to agriculture. This is in terms of rupees 63,680 crores. They provide the loans to the farmers and rural development. This not only this type of loans provide to not only farmers, artisans, rural residents, landless laborers, marginal farmers also can benefit of these banks. So the Indian agriculture sector facing a financial or credit problems. So the government has taken a decision to provide loans to the farmers for the development of agriculture. So these type of loans we are classified into two types: institutional loans and non-institutional loans. So nowadays, institutional loans through the cooperatives, through the commercial banks, through the regional rural banks are providing a wide range of credit facilities to the Indian farmers. And some of the governments is giving directly to the farmers, whereas in Telangana, the government of Telangana is giving a 10,000 per annum per acre to support the agriculture development. They are directly giving to the farmers. So these also help to the agriculture development and relieve the indebtedness of the rural people. So it helps, especially the institutional credit source helps the agriculture development and rural development. So we must support these institutional credit sources to the farmers.